The Memorial Day holiday in the U.S. each year marks the unofficial beginning of summer driving and our favorite two words, vacation season. And the data is in. Are gasoline prices going to be lower this summer? And what does that mean for summer road trips and, of course, our broader economy? Time to pack your bags? Well, let's find out right now on UBS Trending. Well, hello, everyone, and welcome to another episode of UBS Trending. I'm your host, Anthony Pastore. I'm here with my very good friend and colleague from the Chief Investment Office, Jay Dobson. Jay, I remember sitting with you about a year ago where we were talking about last summer's gasoline prices, which for anybody who was driving this summer or last summer and now this summer, they can see a significant difference. We're going to get into that in a minute. But now so Memorial Day is just behind us. Very busy holiday weekend, which you're going to talk about with us. So everybody's ready, whether they're going to be driving or flying to the vacation destination. What can everyone expect for gasoline prices for summer 2023?
Yeah, it's a great question, and certainly one we're all thinking about, right? We're all driving to the gasoline station and filling up. If we look at Memorial Day, gasoline prices averaged about $3.50 a gallon, so $3.50. If we look at our expectation for the full summer, it's below $4, which, will make you feel pretty good. Now, the key really is, what is demand going to be? And we actually think demand is going to be higher in 2023, the summer driving season, than it was a year ago. When we look at the Memorial Day data, I would say the early signs are that it was a little weaker, but even if we just called it flat, I still think lower gasoline prices relative to last year and, sort of the COVID recovery, people are going to want to get out and spend time. I know I do.
Yeah, I do too. I'm looking forward to a few road trips this summer and hopefully on a plane somewhere.
Yeah.
And when you're talking about prices, are we talking U.S. specific or are we talking globally? Because we know that there's a lot of pent-up demand in countries like China, for example, people have not been able to take trips there because of the lockdowns that were so strictly in place. What are we talking about here, Jay?
Yeah, we're talking U.S. gasoline prices.
Specifically.
All the data here we're talking about, it comes from the Energy Information Administration, but it's U.S. average nationally gasoline prices.
Gotcha.
So we're not talking, sort of any one state. Everybody's maybe a little different depending upon where you are in the country.
Right. So when we look at those AAA average prices today, as we're sitting here, it's $3.57, which is a little above that $3.50 you were talking about for Memorial Weekend. So what are the risks to prices right now and maybe in the next 3 months as we go through summer driving season? And just to give a comparison, last year at this time, price per gallon at the pump was about $4.67, $4.70. Yeah. Now it's about $3.57. So it's a significant difference.
Yeah, no, that's a great point. We should start there. I mean, gasoline prices for, the Memorial Day weekend last year were $4.40, $4.50. That's really interesting. Obviously this year they're down a lot. When you look at that, you'd say, why is that? Oil prices are lower, so that accounts for a lot of it. But I think the thing, makes me excited. I hate filling up the gasoline tank and spending money. Gasoline prices last year actually peaked just shy of $5, about $4.96. So the savings this year, if we say gasoline prices are going to be below $4, and I think they might be reasonably below $4, the savings are going to grow as we move through the months of June, which is generally where we see the peak in gasoline prices.
Right.
So I think that's going to be interesting.
It will be interesting. And so versus a year ago, do you expect that we're going to peak out anywhere near where we were last year, or are we really staying below those levels?
Yeah, we'll talk about risks in a second, but I would say risks aside, I expect gasoline prices to stay below $4 for, the balance of the summer driving season. That informally ends Labor Day, so, that first full weekend in September. Mm-hmm. They probably trail off a little further there. You got to make some economic assumptions post-summertime, but I'd say our expectation is gasoline prices remain below $4 for the summer of 2023.
So last year I remember kind of having you come into the studio with me, and I said, there's probably a lot of folks out there who understand that when they're looking at averages for the markets and they're trading commodities, they're looking at prices of oil per barrel, which right now it's in the 60s. But at the pump, no one really understands what drives gasoline prices, or maybe there are a few people who understand what drives gasoline prices. So that's number one of the question. And number two is, you just said this. What are some of the risks to those prices? If you're looking from the barrel of oil to what you're putting in your car, what's driving it? What are the risks to it?
Yeah, I mean, the first one, the U.S. Energy Information Administration, the EIA, as we affectionately call it, has a great graphic on this. And they break down, they're looking at data over the last 10 years. But if you look at the average price of gas right now, let's round it to $3.50, about 55% or about $1.90 of that is the actual oil price. And, you know, people can say what they want, but oil has to be refined into gasoline. So we look at the other 45% of the price, you know, essentially $1.50 of that $3.50, and it's split evenly between refining, so creating gasoline out of oil, then marketing and distribution, and then your favorite, Anthony, taxes.
I knew you were going to say that
State
somehow.
and federal taxes are
right.
the additional ones. So, you know, again, it does vary. As we all know, gasoline prices never go down as fast as they go up, and there's lots of reasons for that. But I would say, you know, on average, oil prices are only about half of the price of gasoline. It's everything else that is the other half.
That's right. A lot of factors go into what you're actually paying when you either take the cash out or put the card against the machine with your car sitting right there. What about, Jay, so like obviously a lot of Americans out there know that the prices we're paying for things like food especially, and certain staples, consumer staples that we have gotten expensive because of inflation over the last 1.5 to 2 years. But we're seeing oil prices coming down. How much does inflation impact what we're paying?
Yeah.
Or what the price per barrel of oil is at the start?
Yeah, certainly. Inflation has had an impact, and it's cooling a little bit. It's probably not where, you know, lots of people in Washington want it to be, but it's definitely cooling. And it's an interesting topic to think about, because when we think about risks to gasoline prices, you know, oil prices, as we saw last year, is one of the big ones. You know, beyond oil prices, you know, we'd say weather, which of course impacts, you know, oil prices. When you think of oil production and oil refining, a lot of that happens on the Gulf Coast. And I'm sure some of our viewers live on the Gulf Coast, and they might know the word hurricane.
Right, which is always a risk from summer months through the fall.
Exactly.
Right.
Weather coming through there can disrupt production, can disrupt refinery operations, so you always have weather risks to think about. And then finally, for better or for worse, you know, you have public policy risks around gasoline prices. And I really do believe public policy makers, most of them, really have the best of intentions, but unfortunately they don't understand the energy business, so you get the law of unintended consequences is the way I think of it. Great intentions that do the wrong thing and actually meant to drive down prices and drive up prices. So those are the things we think about. I would still say, even looking at those today, and we have an oil price forecast that's lower than a year ago, you know, out through the third quarter, or end of the third quarter of this year. So I feel pretty good about, you know, gasoline prices remaining below $4, even thinking about those risks.
Right, and there are still those geopolitical risks out there, right, Jay? We've got Russia, Iran, and let's also not forget OPEC. Just about a month ago, 2 months ago, they cut a barrel of oil by a billion per day in production. So there's really a lot of other factors that play into what we're seeing now with pricing.
Yeah, no, it's right. But as we talked about before we started filming, I mean, the reality is, Anthony, oil prices are, you know, probably at their lows over the last 12 months. So despite all those actions, I think the reality is demand is pretty strong. I think we've got a little too much supply, quite frankly, which that's a lot better position than we were in last year, where really we had very strong demand and too little supply.
Terrific. Jay, thank you very much. Before I let you go, we've got about a minute left or so. What's the biggest takeaway for those watching who are getting ready to take this summer vacation season into full swing when it comes to putting gas in the car?
The first takeaway, of course, is take your vacation, and I hope you're going to.
I definitely will be. I hope you are too.
Absolutely. But I'd say the other takeaway, more seriously, is, you know, energy equities in the context of a diverse equity portfolio. I mean, we talked about energy equities are, of course, about 4.5% of the S&P 500. There's a good argument. Then, of course, we have inflation. They offer you a great inflation protection. I think that's great. They're real assets, so I think that makes a lot of sense. But quite frankly, really basic, and I like this in utility world, own your electric utility because you're paying them that monthly bill. You need it. If you're buying gasoline, why not own the oil company or the refiner? Because you're paying them anyway. If they're making a lot of money, why don't you get the benefit of it?
It's almost like getting a discount on your electric bill if you look at it that way.
Exactly.
By making the investment case for the fact that you're paying your bills, which helps the price of those companies go up.
And you get more than a toaster like you do at the bank.
Terrific. And by the way, Jay, what you're talking about here, we have a message in focus. It's called Invest in Real Assets. It's some of our CIO's best thinking, best-in-class research. Again, that message in focus is invest in real assets, where, of course, oil and commodities are a part of that. So, Jay, thank you for doing this. I hope you have a fabulous vacation wherever that takes you. We'll see you soon.
Absolutely. Thanks,
Great.
Anthony.
Jay Dobson, again, from Chief Investment Office. And for more information, visit our website at ubs.com/views. Plus, we're on social media, most notably our brand newly relaunched, I think I said that correctly, UBS Trending Instagram channel at UBS Trending. There's lots of great content up there for you that you could peruse, and some never-before-seen footage that we didn't get to in time for these shows here. So check that out. And if you have any questions about your own portfolio, make sure to speak with a financial advisor. Until next time, I'm Anthony Pastore. Have a great rest of your day, everyone, and remember to keep your eyes on what's trending. See you soon.